What's going on, Proficient FX family? We're out here in beautiful Bali at our villa, and I just want to bring another video dropping some value and nuggets for the YouTube channel. I'm going to try to upload at least once a week, and today's video I'm just going to share some trades I took this week and some setups and the reason why I took these trades. If you haven't noticed, I'm going to be teaching the same thing in every video pretty much, because that is my trading strategy, the only one I use and the only one I recommend. And if I show you it over and over and over again, it'll eventually click and you'll have huge success with it. But let's go get to my computer. Got this nice courtyard, got the outdoor kitchen. Give it a little tour real quick. Pool, there's a room in here. There's a room over there. No one's staying in there. We just got all our luggage because no one wants to travel with us, I guess. If any of y'all want to travel, come out to Bali, let me know. But we got this outdoor kitchen area. As you can see, it's all outdoors. Got everything we need. Really nice bathroom, but it's occupied right now. But let's get into some of these setups. All right, welcome everyone to this video. I initially was trying to record this video on Friday when I recorded the intro, but the Wi-Fi out here in Bali was not doing very good and it was lagging. So today is Sunday and I'm making the video now, and we're just going to go over the trades that I took last week and the reason behind them. So the first one I want to look at and go over is EURUSD. You can see we have the high here and price starts making lower lows and lower highs. We have this breakup structure here. So for people that draw their trend lines, right? Breakup structure. And now we see price starting to move up, but we see price getting into this resistance right here. So we have some resistance here, and that's where this double top starts forming. So we have the double top. You can see we have these equal highs. This candle, the high was 1.14502, and this one was 1.145. So relatively the same. And you can see if we draw a line across them, we have equal highs. So we know there's liquidity above here. And what retail traders are going to do is put buy stops above the high, because now, see, we're in this buy structure. So they're going to put those buy stops above the highs. And for the people that see this as a resistance in here and that double top, that's going to be retail short as well. So also above here, we're going to have the stop losses on early sellers. Okay, so we know we have identified these equal highs, and we know the buy stops and stop losses on the early sellers are above them. And now what we're looking at is this big move up that takes out the buy stops, and then that aggressive move lower here, and eventually price trades lower. But another thing I want to look at is, see how price came back to this candle here? So this pullback, people are long here, so they're just stacking these buys. They're trying to buy. Right here killed retail traders. And you can see price didn't let them get out of the market. So everyone's buying here, and price does not ever go back that high because they're trapped in the market. If the market goes back up this high, well, now these people have a chance to get out of the market or in profit. So they're not going to do that. They're going to hold price back at that candle. And you can see perfectly, if you go to the candle body, we have that sniper entry zone right there. So this would have been an entry here for the short, or you would have waited until this played out. So we're going to go back to this setup I was talking about. So this down move right here, which is the left leg of, the right leg of the double top. So the left leg's here, right leg's here. So clean double top, equal highs, retail shorting. The banks are buying into that down move and picking up the other side of retail shorts, and they use that to take out the highs, and then they trap traders long here by hitting the buy stops and never going back that high again. Price trades lower, 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 lower. And so this would have been the first entry based off of my strategy. So this would have been the entry off of the sniper entry zone. And price trades lower, lower, lower. And we also can anticipate price to eventually come back up and come back to that last down move that ran out the highs. Because this is where the banks are going to mitigate the longs they used to run the high to enter more shorts. So remember, the market makers are shorting here and keeping traders trapped long. So we are going to put our line right here at the bottom of the candle body of the down move. And you can box the last candle or the whole down move, whichever one. Either way, it doesn't really matter, because what we're looking for is price to come back to the last down move. So now we're just going to watch price. It's going, it's going, it's going. And then now you can see how all these highs right here, we got a lot of resistance playing out. So you want to start identifying all these highs, because like I said over here, you can anticipate price to take out these highs. And that's what we want. We want to see some buy side liquidity start picking up. So now we're going to anticipate price to blow out these highs and hit our entry over here when they're going to mitigate those orders. So we're just waiting for price to reach there. You can do sell limits here and stop loss above this candle body. So it would go above the kill shot zone. And we're just waiting. And what do we see here? Some more equal highs. Okay, so starting to have a lot of liquidity up there. Remember, buy stops and stop losses. And then look what happens. Big aggressive move. Bink, hit it perfectly to the T of that candle. And then aggressive move straight back down. Took out those highs, hit our entry, and now you would have had a wick entry here and another wick entry there. And then you can see price came back a little bit, but never came back. Another aggressive move down, and we ended the week there. So as you can see, two perfect setups on both of the methods that I teach. You would have caught this one here or this one here. And let me go ahead and label this out for y'all. Make it nice and clean. You can screenshot it if you want. But this one here is sniper entry. Let's go ahead and change this color. Actually, I'll keep these the same. I'm gonna change this one since we're on blue with those. All right, bear with me while I clean this up for y'all. I wanna make it nice and pretty. Okay, and this one is the kill shot zone. All right. So you can see why I call this sniper entry, obviously. And kill shot zone is because it kills the retail traders and takes out those highs or lows. So if we go back and look at this setup, from this entry here, you would have had about 4 pip drawdown, so a little bit after spread. Prices rally lowered. There's no reason you'd have closed for any reason until this big pullback here. So at least 200 pips. That's if you closed here on this little pullback. So 200 pips off that one. Maybe you did come all the way back up here and hit a trail stop, still looking at about 150 pips. And then this one here, barely 1 pip drawdown maybe. And price traded lower, about 60 pips. If you went all the way to the wick 65, price came back, and now we are looking for price to continue lower. So now what we'll wait on is a new setup to appear over here. So just because it's starting to trend down doesn't mean it's going to continue down, although it is likely to see a push down in here, just because they've already accumulated so much. And you see all these long wicks, they're pulling price down. So they'll probably come out here and take out some of these lows before continuing up. But that was Euro USD. US dollar yen didn't get my entry. So we'll talk about this setup right here. So what they did right here is kind of a whipsaw. You can see these equal highs, the high over here. So if we just identify this and these equal highs, you can see price ran this out. And then they also had liquidity under here. They ran it lower. Once we saw this down move take out the lows, and then that bullish engulfing candle, this makes the sniper zone because they trap traders short here. So people that were buying, because we are in an uptrend, clearly you want to be looking for buys. We are in the uptrend, so what they're going to do is people are buying here with stop losses below low, they get taken out, and people that entered buy stops probably didn't hold through this, because once they saw these lows breaking, they were like, oh shit, let me get out of the market and sell. And then also you have people that saw this consolidation, put sell stops here thinking price is just gonna fall, trigger, break a new low, continue down. So picked up liquidity on both sides, but this is the entry that I was looking for. On this candle, you can see price didn't quite make it back down and then rallied up. So I'll be waiting to see how price reacts when it gets back down here, but not really a clean setup right now. A lot of range and then big moves going on with the US and China wars, tariff wars and all that stuff, trade wars. So not really a clean setup on that pair yet. US dollar CAD we took short, and I will show you why. So we have price ranging down here, and then you can see this move up right here, and then that big aggressive move down. So we are going to identify that last bullish candle before the big move down, and we're going to drop our ray right at the bottom of the candle body right there. So as you can see, price traded lower, came back, hit it perfectly, and traded down right away. Another wick entry off the sniper zone, traded lower. I actually closed honestly up here about, I think I caught like 36 pips, but it ended up going down about 70. And then there was some news Friday, and you can see price just rallied. But now what we can see is the same thing. We have that aggressive down candle and the big bullish engulfing, and you can see these lows right here. See these equal lows. Price took out all those lows, grabbing the sell side liquidity. So boom, triggers it and trades higher. So what we'll be looking for is price to come back down, and either all the way down here, or we'll have to go maybe to the 1 hour. And if I haven't really looked yet, but if we see, there's like a lot of resistance in here, so likely we'll see, and I can tell kind of by this wick, there's probably going to be a down move right here, and it's going to look like one of these right here. We can also trade those as a sniper entry zone, and that's going to be because right here there's going to be a lot of selling going on from retail traders, selling off of these highs. So if they come all the way back down here, because that's a wide range, it's going to let those traders that were shorting off of these highs get out of the market. But if they only come back right to that area up here, then those people are still going to be stuck short. So I don't think they'll come all the way back down here until more of these highs are taken out. but we'll go back to that time frame here in a second. But you can see what we're about to look at if it played out as I think it did. See how price, this was that down move, and then price came back and retested it. So we'll also go look at this on the 1 hour as well. Maybe there is, maybe there isn't. And let me identify these highs so I can see if there's a sniper zone. So somewhere in here. Okay, yeah. So this down move right here, we will look at, but I want to see if it played out over here as well. A long time ago. Okay, see this aggressive down move right here? So this is going to be retail shorting. I haven't really went over this in the examples, but it works the same way. So we can see price coming up and see how we get into some resistance over here, these old highs. So now retail are shorting off of the resistance, and then price trades higher. So these traders are stuck short. And then you can see you would have got your entry here, and it continued long to take out these highs. But let's go look at our example for this coming up week. So you can see, like I was just saying, you have these highs here and highs here, and that's going to be retail shorting. So this is retail shorts, and then see how this was another bullish engulfing. The banks bought up all those orders and continued price higher. So we're going to highlight this candle, and price should not come back below this candle because then it's going to let retail traders out. So what we're going to anticipate is a pullback to this area right there. Long term, price will probably come back down here, but for now, this will be our trading setup. And if we go from this last low to the high, you can see right here perfectly on that candle, we have that 38 fib. And let's go from this low here, because if you go to lower time frames, this will be a swing low to swing high. And then you can see that is my 70% fib level, and that is my main entry key. So that's how fibs work with this as well. So we delete that. Oh, I deleted the wrong one. So we know we have a 38 fib there. I love my entries on the 70 and 80 fib. So we're going to go here, and you can see clean 70% exactly on it. So both fibs line up. We have our sniper entry zone. So this will be a buy for next week, or this coming up week. So this is, well, at the time of this video, some of y'all are going to watch this way later and miss this trade, but it'll be nice to see how this plays out. Sniper entry zone. So what we're looking for, I'm gonna go ahead and just give y'all this one. So hopefully y'all take this and make some money. What we would look for is, where's the tool I'm looking for? Long position. So this will be our buy entry, and we're targeting equal highs. So we'll go back and look at it, and your stop loss is gonna go below that candle. So to be really safe, we'll go below the wick. We're only risking 30 pips. If you wanted to go here right below it, you could risk 20, but what's a 10 pip difference? So we're gonna go 30 pips, and then we're gonna zoom out and see where price is likely targeting. So see these equal highs here? That's gonna be our first take profit. So right above them or right at them. So right here, we're risking 30 pips to make about 70. So that's good to me. Oops, I'm gonna have to fix that. So we'll just go for a 70 pip take profit. So this will be the trade setup right here. Price trade lower, hit our entry, come back up here and hit our target. So hopefully y'all are watching this video in time. I'm gonna go ahead and screenshot this as well. Okie dokie. Done. All right. I didn't trade USD Swiss franc. I'm still waiting on price to come back over here. So you can see these equal highs here, that aggressive move up. So I'm looking at that last down candle. You can see equal highs, some highs here, highs here, highs here. So I'm looking for price to take out all those highs. We're just gonna draw one line across here, but you can see multiple highs and come like this. Ooh, I didn't even notice. I missed a perfect trade last week. I'll show you why here in a second. I just saw it. So that's what I'm looking for. And if we go look at this, actually, a trade we could have taken last week. See how I was just talking about on USDCAD, that random bearish candle. So they'll stick out like that. You'll see a big move and then just a solid bearish candle, or if it's the opposite way around, it works too. If this was all the way down and then there's a random bullish candle and then a huge bearish move again. But bullish move, random bearish candle, bullish move. And let's go back and look at this. So you see this bullish move, that bearish candle here, and then bullish move. That would have been our sniper entry zone right there. I honestly didn't even see that until just now. So you can see right off the candle body would have been your wick entry perfectly. So this would have been your entry. That was ugly. And this would have been your trade setup. So you would have been looking to buy at that candle. Your stop loss goes below the candle. This one, there's no wick, so we would have been right here, risking 6 pips. And price went up 34 pips. So almost a 6 risk to reward ratio. That's really good. But like I said, I'm still waiting on that long-term sell up here. So I didn't catch that trade. No, I didn't take anything on GU. Where was the trade I took? AU. Let me go look at the 4 hour. Oh yeah, I think I showed this in the last video, to be honest, but we'll go over it again. So this was that sell, and then I sold actually again this week from here. So if you haven't checked out the last video, definitely go check it out. I'll link it below. And also, to really understand everything I've been going over, you need to watch the market liquidity video on the channel, which I will link below as well. But in that video, we talked about this one. You can see that down move and that big move up. So they ran out these highs. We know they trapped longs, and they're going to mitigate these longs that they use. So remember, they bought into the down candle. And when price trades lower, we can anticipate it to come back up, and they're going to mitigate those longs used to run the highs and enter more shorts. So what would have happened was we have that down move from the retail traders, retailer short, banks buy into that down candle, they run the highs, and when price comes back to that candle, they mitigate the orders here. You can see that aggressive move down. So they dumped all of these longs and entered shorts. That's what mitigate means. So if they're long, they're mitigating longs, which means exiting longs to enter shorts. So you can see rallied down from when they shorted here, and then those longs were negative, but they mitigate them here. So your trade would have went like this. Your short position, stop loss right above that wick. So you risked about 30 pips, and you can see price rallied down 129 pips. And why I entered this short here, although it came just to this wick, you can see here, I knew that they weren't going to break this high, not until they took out these lows. So look how perfect these equal lows are. And just spotting those equal lows is why I took this trade. And you can see price hit it perfectly. So this would have been an entry, and you would have got out of the market somewhere in here probably. Hopefully you got out down here, but price made equal lows, came back up, gave us a second opportunity here. Boom. And your take profit is those equal lows, and you can see would have wicked it perfectly right there. So if you entered here and you got out right there, 122 pips. So another clean setup right there. And GA was just absolutely beautiful. We actually went over this trade as well, but we'll go look at this. So if we look at it just from here, you probably already saw the future price, but we have this low, we have all these lows starting to line up, and it looks like the market is just going to tumble, right? I mean, we have this trend, kind of breaks it. We have a huge aggressive move down through those lows. So a lot of retail traders are going to be shorting the market, thinking this is going to be a continuation lower. And banks buy into that down move. They trade higher. And it actually retested right here. If you would have got that entry, I didn't enter there. I just waited, and I just watched this setup for a while, and you can see that perfect entry right off the candle body. So if we look at the candle body, so this would have been the opening price. So if we look up here, we're going to look at this number here. So this is the candle open. You see it traded higher a little bit and then a big move down, but we're looking at that 1.81966. So let's go ahead and just change that. 1.19, I forgot already. Okay, yeah, 81966. Oops. So let's go ahead and change to that. 81966, right? And look how clean this was. I'm gonna go and delete this real quick. So the low of this candle was 81962. So perfect, hit it. And this one, look at the low, 1.81966. So you can see the high. So let's look at actually the open. So open of this candle, you see up there, 1.81966. The low of this candle here, same exact number, 1.81966. So tell me that was not the market makers manipulating that price right there. Anyways, perfect entry. Boom. And price just rallying and rallying and rallying. So if we look at this trade, we would have, oops, we would have been looking for a long. So long would have been that down move. Stop loss would have went below the candle or below the wick. On this one, since we have a long candle, we'll go just below the low of the body. And your first take profit would have been here, 250 pips, and price just kept rallying though. So if you held, price came all the way up here for 530 pips and eventually came back down over here, still would have been about 400 pips, and then right now from that entry about 450 pips. So absolutely beast trade. As you can see, we were in this bullish trend anyways, so you would be looking for those buy setups for extra confirmation. But that is all for this video. So that's all for this video, guys. Hopefully you found value in it. And if you did, please thumbs up this video. And if you haven't already, subscribe to the channel and become part of the Proficient FX family. And check out the description below and join my free Telegram group where I post all of my trades and analysis for free throughout the week. I'm gonna go ahead and grab me a cold beer and we are gonna chill by the pool and look at some charts. But I'll see you on the next video. Cheers.